One of my subscribers, Daniel Lupo, sent me an email and wants an unbiased opinion of what I think about the Uber and Lyft IPOs. And he writes, let me just quote, "I have a request for a future possible video." Well, you're getting it right now. "Your take on Lyft and Uber's upcoming IPOs. I truly believe your take on the subject at the moment would go viral on this topic. There are so many talking heads on the financial networks pushing their own hidden agendas that it's nearly impossible to get an unbiased opinion." Firstly, I couldn't agree more with that statement, right? That, the financial networks, the banks, the people behind this obviously have their own opinion and want to see this go in a certain direction. But you have to take a step back, and the public really needs to know what's going on here. So I think it's a great question, and it deserves an answer. And you're simply getting an answer from a person that is dialed in to the rideshare world, right? That speaks to hundreds of Uber and Lyft drivers every week, that receives emails and text messages every single day. So I truly feel that I am dialed into the heartbeat of Uber and Lyft drivers, right? So we have to look at, we sort of have to take an eagle approach here and look down and see, okay, what are all the moving components? We have the two companies, Uber and Lyft, run by their CEOs, by their management teams. We obviously have a lot of investors that have put a lot of money into this, right? We have the public who soon has to make a decision. We have the financial markets, the various stock exchanges here in the US and abroad that are constantly, the brokers are constantly reading reports on these two hot issues, because they will be coming up back to back. Literally, I think within days or weeks apart. Somebody's going to make the first move very, very soon, right? And there's going to be a certain reaction from the market. But it's important that the public also hears a very, very important voice. And that is the voice of the drivers. The passengers, the riders will always be there, right? Transport will always be needed. Even if these two companies 10 years down the line, they come out with their IPO in 2019, and 2029 they introduce, fully autonomous vehicles through their existing network, Uber and Lyft. I don't think the names will ever change. The people might at some point be getting into cars that don't have drivers. But regardless, that income model will just be incorporated within the Uber and Lyft model. So will many other additional services, whether it's express package or cargo or truck or drones or flight. The company itself is set up for multiple plugins that you can plug into this existing model that'll benefit definitely the company and the passenger. The driver at some point might be, and I say might be, obsolete, but from what I hear from passengers, they would still prefer a real driver versus putting the full trust in a robot, right? So, folks, the level of unhappiness, anxiety, stress felt by the drivers, right, the people that generate the money for this company, is at the highest. And the public needs to know this, right? I don't think you can just look at Uber and Lyft as the company and say, okay, well, cool, it's a great model. It's proven itself. It's been around for years. And, they're not showing profits yet. They will show profits soon. And I'm willing to take the next step and invest, right? Things can change very, very quickly. I do feel that the drivers have the power here, right? And you only have to push a big group of drivers so far until they hit that threshold, and they will act, whether it's in form of unions, strikes, whatever, that'll affect stocks big time, right? So it's Uber and Lyft's role to keep that part of the company happy, because if they succeed in doing that, the investor, the public, will be happy as well, and money will keep on flowing in. If there is a disruption, if drivers reach their threshold and decide to walk, decide to strike, there's going to be a ton of volatility in the market. Mark my words, right? And I can tell you that YouTubers or influencers, people that are out there reporting every day, helping, doing videos to try and benefit the drivers, sharing free information, we leverage a ton of control when it comes to these IPOs. That, my friends, is not a threat. It's a fact, right? So take this segment of the market very, very seriously, right? Especially like CEOs like Dara. They might be inviting in, and you know, the public on the outside sees these two big glamorous corporations, right, with a lot of future potential. And granted, they have a ton of future potential, right? As I mentioned, all of these plugins are real. You know, the drone services, courier services, all of that can be plugged into this model, and the company can grow and grow and grow and branch off in multiple ways. But right now, I would say for the next 2 years, they both will have to do way more for the drivers. So I'll give you an example, and the public won't really know this, but the toying, the playing like a yo-yo with drivers as far as their earnings, their rates, giving them simple things in the app such as destination filters, taking them away, increasing the rates a little, dropping the rates. I don't think the public is dialed in to how drivers feel, right? And you can invite little think tanks or groups to your offices in San Francisco or North California, right? That'll make suggestions. And usually these suggestions is just hand cherry picking a couple of ideas from drivers and putting them into the app and updating, spending a lot of money on the app. But the disconnect here is really with the CEOs, management, and the drivers. There is a huge, huge disconnect. And how can this affect the markets? I think it can affect the markets in a massive way. Can you just imagine that the top 20 or 30 YouTubers decided collectively, and we all know each other, that we've had enough. We've had enough. Because I will come batting for the driver every day. I'm grateful to the company that this opportunity is out there. I'm grateful to a guy like Travis Kalanick, who's a trailblazer in my eyes, who went out there and educated the market, opened up the market. I'm grateful to a guy like Dara, who's come in to do, specific damage control that maybe Travis has done. But don't ignore who Travis is. Travis is the rideshare business, right? Good or bad. I acknowledge that. He's opened up these markets. We're in the US, we're in Asia, we're in Africa, we're in Europe, we're everywhere. And if you compare the two companies where they stand right now, Uber has really gone in and aggressively opened up these markets. Lyft flies in underneath the radar, scoops up cities, now rolls out internationally, and Lyft has room for a ton of growth. They haven't even gone to Europe. They haven't even gone to Africa. They haven't even gone to Asia. So that is firstly, to me, that is a super, super promising stock as far as, A, they know how to stay out of trouble. B, they have a lot of markets to open up. And once the money starts flowing in, right, they will, mark my words, aggressively open up the markets. But both companies cannot ignore the most important factor that gets them there, that opens up that market, and that is a driver. For sure, you can have your executive team operating out of San Francisco, and you'll have troops on the ground in Europe, and drivers on the ground driving in Lisbon, Madrid, Cape Town, Tokyo, right? But the heavy lifting, it's still the drivers, and you got to keep them happy, right? You cannot treat them the way you're currently treating them. And I think it's a very, very important factor to consider here if you are a potential investor, if you are a future investor into either of these two stocks. Now, with Uber, I know for sure that there's still skeletons in the closet, right? I know firsthand, right, that there are issues that will crop up in a big way, right? But I think Dara and the Uber legal team have taken care of issues very well, right? It's not like they've swept them under the carpet and pretended that they don't exist. No, they took the issue on, they corrected it. You know, when they had the problem with certain executives treating female executives in a harsh way, he went, stepped in, took responsibility, and cleaned up, right? Got rid of a few people. And so the leadership, the management teams certainly know how to conduct their roles, no doubt about it. What they don't know is how to treat their money makers, the drivers. So if they can reach out, if they can find ways, right, to keep this base happy, you're not going to see drivers starting and leaving, right? Because there's a very, very high turnover. I don't think the public really knows. I could show a person or a bank that sits down with me how this turnover works, right? How many drivers come in. It's like a washing machine. Go out, change, switch. You know, I'll see a name jump from that company to that company. And then, you know, there's a loyalty for a while there. They may stay there. They may switch back. They might drive on both. There are so many moving factors that will play into this IPO on the driver's side, right? So I'm ready to sit down with any TV network, with any bank, to really explain the pulse, the heartbeat of this company, right? And your directors and your CEOs, that's one thing, right? Those guys have to make big decisions. But troops on the ground, right? If I could see myself as a general on the ground with multiple drivers, troops, I understand the psyche of my soldiers, of the drivers, right? That's what I'm dialed into. And I think that's what Wall Street needs to be dialed into more, is understanding that psyche, right? I'll give you an example, and I think I've covered this already, but like they will constantly, both companies, firstly, if something works for the one company, the other one copies it. If one company is throwing a higher bonus on recruiting drivers in Los Angeles or New York or New Jersey, for example, the other company follows suit. So there's a lot of copycat behavior between these two companies. Of course, they also have shared investors. So I guess a lot of this information is shared. But people have real big decisions to make. Is it Uber or Lyft? Now, my take is I think both are a super, super safe bet. I just think that the behavior in the first 2 years is going to look very, very different. I think that going in with Lyft is a very secure decision, and it's going to be a slow upward climb. You know, that stock's going to rise and rise, just pretty much like Amazon did. They built, they expanded, they built, they expanded, and it just went one way, up and up and up and up. You know, same with Apple, same with Microsoft. I can see Lyft's flight path in a very, very similar pattern as those companies that I've just mentioned. Now with Uber, I think that in the first 6 months, there's going to be a lot of volatility. I don't think that the share price is going to start off strong and climb and climb and climb. I could sort of see it following the Facebook pattern. And, you know, to give you an example, Facebook made a lot of adjustments, a lot of corrections, and still is. But they're now seeing a steady climb. And you know, there's obviously a lot of volatility with the Facebook stock as well. But I see Uber following the same track. And purely the reason why I say that is because until this issue with the drivers is addressed and that, you know, there's more consistency and more balance as far as the rates that they'll be earning and that they're taken care of a little bit better in many ways, and that there's a structure in place to incentivize drivers and allow them to grow within the company and climb the ladder within the corporate structure. You know, whether you've done 500,000, 1,500 or 10,000 trips right now, both companies have nothing in place to incentivize a driver, right? So if once these companies introduce incentives, firstly, the drivers will stay. There'll be more loyalty. And that, of course, is going to be a big factor when it comes to the behavior of the stocks, right? If both companies can rely on drivers sticking with them versus leaving right away, you're not going to see that up and down movement in the markets, right? So that needs to be there. It really needs to be there. And I think that Dara played a role smoothing out, ironing out a lot of the issues. I don't think that post-IPO he's going to be staying there. I think that they might bring in someone with a bit more aggressive business tactics, restructuring tactics, right? But whoever takes the captain's wheel at Uber or Lyft, you know, they need to understand that that stock will behave the way the drivers behave, right? If the drivers are happy, the stock will be happy. That's my take. You know, you wanted my opinion. Do they both have a promising future? Absolutely. Right? Potential for growth is just through the roof, right? But at a pivotal point in time, at a crucial point in time, you know, you gotta, that captain has to steer that ship through rough seas. Right now, there's some really, really rough seas because of that unhappiness amongst drivers, right? So not too much cozying up to the passenger, the rider side. You know, they're already getting all these privileges and rates that are just so ridiculously low. But putting things in place for drivers, really meaningful things, you know, better treatment all round, incentives, you know, better rates, that would make a massive difference to the stock price. That's my opinion, folks. What else can I mention? You know, as I already said with Lyft, you know, right after Canada, I guess they're going to be jumping to, my guess they'll be going to Europe, right? Again, it's an educated market. Money's going to be flowing in. They're going to open up, you know, country after country, Germany, Switzerland, Portugal, Spain, Italy. No doubt about it. That's an easy transition right there, jumping from Canada to Europe or into China or into Japan. So that lot of promising growth on the Lyft side. Uber, some of the skeletons that I know will still show up. Will Uber take care of them? Yes, they'll iron them out as they have in the past, throw a lot of money on squashing a couple of legal cases that will arise on the horizon. I know what they are. I truly know what they are because I'm dialed in and I know the problems that they're going to be facing. But they handle them well. Dara's handled them well. When it comes to the marketing and recruiting of new drivers, I can tell you as one of the top recruiters, and I think I speak on behalf of many other recruiters, that also we are being mistreated here, right? You can't entice us with $10 to bring you a driver. It doesn't work. You got to make it, you know, you got to make it reasonable. And I'm talking like $250 up to bring you or recruit you a driver, because, you know, that's free marketing that these companies are doing out there. They're allowing social media and other drivers to recruit other drivers. But you can't, again, change willy-nilly, dangle, you know, $100 note and then a $10 note. There's too much ups and downs, and guys like myself, why would I go out and recruit in a specific market? Let's say, for example, like Fresno, Bakersfield, or Miami. If you're offering me $10 to $25, I'm not interested in that, right? So you're going to see markets just drying out on drivers, and that's purely because these companies don't know or don't really know how to take care of their recruiters, right? They don't spend the money on radio advertising, sponsoring, and TV advertising as many other big corporations do, right? They rely more on the driver bringing another driver. But in order for the companies to make it attractive to me, for me to sell their story, right? Firstly, the treatment has to be right towards other drivers. And secondly, we don't work for anything under $250. The norm to bring a driver is $250 to $800 to bring you a new driver, a new recruit, right? Just like you'd be paying top dollars to the Army does to recruit Marines, or other companies spend on recruiting professionals. They spend top dollars. So Uber has to understand that to bring in talent, to bring in new, fresh talent, you have to take care of the existing talent and keep them happy. Guys like the influencers, guys like the recruiters, the YouTubers, right? Again, it doesn't fly $10 here, $50 there. There's got to be like an absolute minimum of, let's say, $250 for a driver being brought in. So once they sort that out, I think, again, a lot of drivers will flow in to the company. This is about keeping different segments of the company happy, right? So that the stock can show up in the most healthiest way when it launches, when it's out there. And it's really, really important that the public, the investors, the bankers understand this missing component, right? The driver component. What an integral part of the puzzle it is in order for this stock to behave positively, right? The worst thing that could happen is that people pour vast amount of money in, expecting somewhere down the line to see returns, and then this whole thing breaks apart because the workforce rebels. The workforce strikes. There's nothing worse for that stock, right? For example, if you look at Boeing right now, what happened with the 737, right? Everyone just pounding the social media on the 737, people not getting into planes on the 737. How do you think that played out on the stock, right? The drivers are like that plane, right? Now that plane is either reliable and has none to minimal issues, and that's the same way you want it to be in the rideshare industry. You don't want to have any issues or problems with drivers. You don't, right? You can't afford it. It'll just backfire horribly on the stock. So that's my input, my unbiased opinion from a professional rider who represents and speaks on behalf of many drivers. Both super good companies with a super promising career, with great captains at the steering wheel. Just, the people that do the heavy lifting, that, I think, my friends, is the component where both companies need to show way more attention. And then you, the public, I think, will be satisfied with some amazing returns. You'll start seeing profits show up when there's more consistency. Remember this, to just the costs of recruiting new drivers because of this unhappy. Can you imagine how much money you'd want to recruit a driver and keep a driver, not constantly throw tons and tons of money at the market recruiting new drivers because they're unhappy, right? The money that they burn through, the burn rate of that cash just to keep an engine of new drivers coming in, right? You want to get the driver in and keep the driver. Please listen to that. Dear CEO at Uber, CEOs of Uber and Lyft, I think I make a very valid point there, right? If you get that under control, the share price is under control. Have a great day.